Hi there. So welcome back to the stream once again. So today we have a new set of issues that we want to talk about. So today I want to look out for one of the key fundamental topics in accounting, which is what? An incomplete record. So as you can see on your screen, we are going to discuss this. So if today is your first time, do all to like, share if you're a previous subscriber or you are actual member of this channel. Then thank you always for joining us. Make sure to like and then share and drop a comment for us to get going. So let's go straight to the question. The accountant has found the following details of transaction for J. Frank Shop for the year ended 31st December 2023, something like that. So we have transaction A to what? F. So required, draw up a statement of affairs at the beginning of the period. B, prepare the cash book for the period. C, prepare income statement for the year ended 31st December 2023. Then lastly, prepare statement of financial position as at that date, generally there. So as always, for us to start with any accounting topic, we need to come out with the name of the business. So you can clearly see that the name of this organization was given as what? J. Frank Shops. So you have that generally coming up, J. Frank Shop. So you have that written here as such. So we start with A, statement of affairs. Statement of affairs is the same thing like what? The same thing as what? Balance sheet, right? It is the name that we give to a balance sheet or financial position when we are into incomplete record. So we call it statement of affairs. We prepare statement of affairs for us to know a snapshot of what? The capital that we use to start the business and what are we having now. So we prepare statement of affairs for us to know the opening and then the closing capital of the entity or for the business. So we'll have statement of affairs. Statement of affairs. Just a statement of what? Affairs. For the year, let's say for the year 2022, so that we can extract the opening capital of the entity. So statements of affairs. So back to the question here, we have been told that the accountant has the following details of transaction for J. Frank Shop for the year ended 31st December 2023. So that means that from information A to E or A to D relates to information of what? The current year, that is 2023. But when you look out for additional information E here, it said other information is available. These are also the balances of the other items that we have. They are opening and closing what? Balances. And as well, we have what? F. The fixed assets consists of fixtures which were valued as at 31st December 2022, at 3,300. And it says that these are to be depreciated at 10% per annum. So that means we're going to prepare statements of affairs by taking into account the opening balances as at what? 31st December 2022. So let's take note of that. So we'll start by taking into account all the assets what? Items. So we'll begin with what? The non-current assets that we're supposed to have. So first, we need to have our currencies down. It's in Ghana cedis. So we have, let's say, two currencies down here. So we start non-current assets. Non-current assets. So for non-current asset, we have been told that as at 31st December 2022, there were a value of fixtures which was valued at what? 3,300. And you know that depreciation are provided at the end of the year. So that means that even though we know the value as at 31st December, but the depreciation that was supposed to charge as at 31st December 2022 has not been calculated. So once we bring that here, we need to charge the depreciation, right? So we'll have what? Fixtures. So we'll have fixtures, and the cost for fixtures was what? Valued as what? 3,300. The next thing we want to do is to less what? Depreciation. So we'll call this more like an accumulated depreciation, something like that. Okay, depreciation. So we are told that depreciation is 10% on the cost. So we have 10% multiplying what? 3,300. And we're supposed to get a depreciation figure of what? 330, 300 and what? 30. So once we do that, we just want to subtract, and whatever we get becomes the net book value of the fixtures. The net book value of the fixtures. So what do we get here? Supposed to get, so here is 0. So here you're going to get here 0, 7. Then here, what are we getting? Are we getting 9? Then 2. So supposed to get what? 2,970. You can confirm that with your calculator and let's see if that is true. So you get 2,970, now you are good to go. So once we are through with that, then move on to what? Is there any other non-current asset? No. So move on to the current assets, then we are through. So come to current assets. Current assets, assets that last within what? One accounting year, whose benefit is within one accounting year. Current assets. So we start with what? Stock. So the stock as at 31st December 2022, here we were told that the stock figure is 6,360. So we'll have the stock coming up here, okay? So we'll have here to be what? 6,360. Then from stock we come to what? Debtors. Debtors or trade receivables. So what was the trade receivables for the year? We have been told that is what? 5,500. Just want to present that. So we read and work. So we have here as what? 5,500. That is the issue about the current assets. Then move on to what? After debtors, move on to cash. So we're having cash balance. So just want to write that. So far as we have cash, suppose we have bank. So just want to write that. But it's not all the case. You may have the two. At times, maybe just the one. But I think in this question, we have cash balance and then the bank balance. So there's a bank balance and there's a cash balance. And these are the figures that you can see generally here. Okay. So cash balance as at 31st December 2022 was what? 320. So we have that coming up here. 320. And that of the bank balance too, we have been told that it was what? 5,650. 5,650. 5,650. Just want to have that also coming up. Is that all for the current assets? I guess so. Yeah, I guess so. We don't have any prepaid. So we sum them up, see what we'll get generally there. So in summation, your calculator is supposed to be able to get 17,830. Supposed to get. Are we through with that? Or is that, let me see, the calculation I made here. Yeah, it's supposed to get that 17,800 and what? 30. So you have 17,830 coming up here. Okay. So once we are through with that, the next thing you want to do is to then look out for what? The current what? Liability. So we are using the accounting equation, asset minus liability should be equal to capital. That's what we are using here. So at the end of the day, whatever you're going to get after we subtracting liability from assets, that will be our opening capital that we use to start the business. So let's take note of that. So what do we get here? We want to present in our current liability. Current liability. So we start with what? Creditors. So what was the opening balance for what? Creditors, or creditors for goods, or trade payables. So let's see creditors. So we have been told that creditors value, or creditors for goods, as at 31st December 2022 was given as what? 1,600. 1,600. So present that here too. So we have 1,600. Is that all for, okay, rent owing as at 2022 was dash. So we don't have any liability. So it's only just the creditors. So we just want to subtract that 1,600. So when you subtract 1,600 from 17,830, supposed to get 16,230. Supposed to get here as what? 16,230. Okay. So that you're going to have that in the last column here. So 16,230. 16,230. So once we have that, this will give us what we call what? The working capital. So I can bring it down here so that we can have the name for it. Working capital. So working capital is equal to the current assets or current assets value subtracting current liability. That will give us the working capital. The capital at work. Okay. So working capital, that should give us what? 16,230, and I think I'm right there. Okay. So once we have that, that is all. We don't have any other item to consider generally here. So that means that if we are to add the working capital against our, that of what? The net book value for fixtures, that will give us what? The capital at start. That is the opening capital. So let me write opening capital. So the opening capital, we add the 2, supposed to get 19,200. 19,200. And you are good to go. So that will give us what? Our opening capital. So we prepare that statement of affairs for us to know the opening and closing capital of the business. And that is what? 19,200. So let's take note of that. 19,200. So that is the A part of the question, statement of affairs as at the beginning of the period. So next, we are asked to prepare the cash book for the period. Cash book. So how do we go? Cash book 2. It also should be a statement form. Okay. So cash book. Cash book. All right. So you have a very big horizontal line. Cash book. Bring it up so that we can flow. So cash book. So here you're gonna have what? 2 columns as always, or let's say 3 columns there. So you will have a column for cash. You will have a column for bank. So we have cash, column for bank, and let's say column for totals. Total. So currencies are in Ghana cedis. Currencies are in Ghana cedis. All right. So we first have to start the entries by looking out for, okay, as at the beginning of the period, was there any opening balances for cash book in terms of cash and then bank? Let's see from the information given. So we have been told that as at 31st December 2022, the balances of cash and bank was 320 and 5,650. So that means these balances as at 31st December 2022 will become the opening balance for the year 2023. All right, so we have the opening balance as such. So we just want to bring that up here. So you say balance brought forward. Balance brought forward. Balance brought forward. So for cash, we know it is what? 320. And for bank, we know that is what? 5,650. 5,650. So when we add the two, we will know the balance of cash book at the beginning of the period. And what were we getting? Supposed to get 5,970. You can check that with your calculator and let's see if that's true. And that is what I have here. Yeah, 5,970. Present that here. So the next thing you want to take into account is for us to know all the information that transpire with respect to cash in terms of receipt and payment. Because cash book is a book that deals with what? Transaction with respect to receipt and payment in terms of cash and then what? Bank or say check for short. Okay. So we want to know all the receipts so that we add all of them. So we'll get a column for what? Receipts, or a line item for the receipt. And then we know how much you receive as cash, how much you receive at bank, and then the totals. But we can see that. That is what we're going to do. And after that, we'll less all payment. And the balance will give us the closing balances for cash, book, respect to cash, and then bank. So how do we go? Let's see from the question, what was the receipt values here? So A, let's start with transaction A. It says the sales are mostly on credit. All right, the sales are mostly on credit. The sales are mostly on credit. That is, they deal with credit terms. No records of sales has been kept, but 61,500 has been received from persons to whom goods have been sold. So that is more like what? Amount of cash that we have received. And let's see what they are saying here. It says that within this 61,500, 48,000 is by cash, okay, and 13,500 is 48,000 is by check, and then 13,500 is in the form of what? Cash. So that is the division that we have generally here. So let's see how we record that as a receipt. So we have for cash as what? 13,500, and that of what? Bank is what? 48,000. So you know we're gonna get what? 61,500. 61,500. So is that all for the receipt that we're supposed to have for the receipt? Yes, I think that is all for the receipt. Okay, so once we have that, the next thing we want to do is to deal with the payment issue there. But notwithstanding, we can underline though, or better leave it after everything, then we'll see whether we'll add or underline it straight or not. Because we are not yet done, so you can't conclude that that is all the information. All right, so you just want to take your time. Then we create a space for, say, payment or line items or payment. So for payment, in terms of cash and then bank, we are lessing them from what? The receipt, so that we know the balance. So we start with the payment issue. So transaction B, it says that an amount paid by check to suppliers during the year was what? 31,600. So that was the payment that we made to suppliers. Okay, that is those that they sold to the business on credit. they are creditors, so when we pay them, they receive it. So we'll have suppliers coming up here. So we have suppliers, or say creditors is the same thing. So suppliers or creditors. So we have been told that we pay them by what? Check, right? Yeah, check of 31,600. So just want to present that in a check column. So we'll have here as what? 31,000, okay, 600. Then we continue with our payment issues. Then when you come to transaction C, it says that expenses paid during the year by check, rent, 3,800, general expenses, 310, by cash, rent, 400. So just want to record that as well too, as an expense. So rent. So rent, we know that cash figure is what? 400. And then that of bank was what? 3,800. Let's see. Yes. Okay. And then we have general expenses as well. 310. We present that also coming up here. General expenses. General expenses. So general expenses too was also given as what? 310 by check. So 310. Was there any other information in respect to payment? Yes. So come back to transaction D. You said J. Frank took 250 cash per week. So you ask yourself, how many weeks do you have in a year? So that means within the year, every week, J. Frank took what? 250. So for us to know the total amount of cash he took for the whole year, just have to multiply what 250 by 52 weeks. There are times where the examiner won't give you this. So you're supposed to know that for a year we have for 52 weeks, so that you multiply. Most of the time, this is one of the issues where students fails to apply it, and then they will get their presentations wrong here and there, and they will lose a lot of ticks. So here multiply by 52, so that we get to the total drawings. We call that as drawings. So it's part of the payment issue. So drawings. So drawings supposed to be equal to 250 multiplying what? 52. And that will give us a total value. So what do we get? Was the drawings in cash or check? Say you took 250 cash, so that means go to the cash column. So you have 250 by 52. You're supposed to get, I guess, 13,000. Let's check and let's see. I think I had the same thing. 13,000. Yeah, 13,000. So I think that is all for the issue about the payment, and then that's of what? The receipt. So just want to do our addition so that we can flow. So we add them, we add them, we add them. So here you're supposed to get 13,820. Here we are getting what? 0, 5, 6. Then here is supposed to get 13, remember 1. So we are getting 53,650. And here it is supposed to get 0, 7. Then here supposed to get 4. All right, that's 14. Remember 1 here, supposed to get here as 7. So you're going to get 67,470 as such. So that's for the issue about the receipt side. Then we also add the issues about what? The payment, the totals for the payment. So we add them here. You're supposed to get to 13,400. Then we hit, what are we getting? I think I had a total figure of what? 35,710. I had it to be 35,710. So that's the total for that. So we're going to subtract these total figures from their total receipt figures in that case. Then we do same for the totals as well too. So let's get their total. So you're going to get here as what? 31,600. Here supposed to get, is it 4,000? 4,200. Can check that. Here 310. Then here you're getting what? 13,000. Let's see what I had in total. Yeah, so in total I had 49,110. 49,110. Just also want to subtract that from the receipt figure. And whatever we'll get becomes the balancing figure as at the year 2023. So we'll have here as the balancing figure. So the balance, we'll call it the balance carried down for short, or let me write it in full. Balance carried down. Okay, so subtract 13,000 from what? 13,800 and what? 20. What are we going to get? Then supposed to get 420 like that. So here 420. Okay. Then here too, what was I getting? In my calculation, I have here to be what? 17,940. Can also confirm that, and let's see. And here too, I had 18,360. That is in total. 18,360. So this becomes the the closing balances for cash, bank, and their totals. Okay, cash, bank, and their totals. And that is all for the B part of the question, cash book. Any question you want to throw in a chat, and make sure to like the video and share with your friends and interested students for them to join. So once we have that, the next thing we want to do is move on to what? The C part, where we are asked to calculate what? The C part, you're asked to prepare the income statement for the year ended 31st December 2023, sorry. So we have what? Our income statement. For the year ended 31st December 2023. Align it nicely. You're good to go. So here, I'm going to present two cash column. So you have these currencies coming up. Okay, so how do we go? We start, when it comes to income statement preparation, we begin with what? The first line item called the revenue or the sales. So anyone you want to start with is supposed to be able to go. But you know our sales figure? By look, we don't know, so we need to work for it. So let's say it is workings 1, so that we have a column to work for that as well. So let me try to present that generally here. Say workings. So for us to get our sales to be used in the income statement, we need to prepare what we call what? A sales ledger control account. Sales ledger control account, or debtors control account, the same thing. So we'll have here as well debtors control account as a working, okay, as a working, so that we can know how much we're going to transfer to the income statement as sales. So this is a working, so we're going to use a T format to present that generally here. So I'll have my two currencies coming up. So before we start the entry, we're supposed to know, was there any opening balance for debtors? Yes, for the year 2023, we have opening balance for debtors to be what? 5,500. So we present that here, 5,000. So that becomes what? Balance what? Brought forward as what? 5,500. Okay, 5,500. The next thing we want to do is to ask ourselves, was there any receipt during the year? Yes, there was a receipt. What was the receipt value? We were told that the receipt value is what? 61,500 being divided into check of 48 and cash of what? 13,500. So we have that same division coming up. So since debtors has paid for it, it's going to be credited on the right hand side here. Okay. So we'll have first cash was what? 13,500. And that of bank, we're told that is what? 48,000 coming up. Was there any other receipt during the year aside 61,500? I think that was all for the year. So that means that once we are through with that, the next thing we want to know is that, is there any balance, closing balance for debtors as at the year 2023? Yes, we have a closing balance of what? 6,600. So we present that as a closing balance. So since it's going to be on the debit side, we will have the carry down on the credit side. So we call it balance carry down. Okay. So we're going to record that as what? 6,600. 6,600. Yes. So once you are through with that, then we need to find the totals. So what will be the total for debit and credit? So for the credit side, supposed to get a total value of, here I had 68,100. So here I had here to be 68,100. So that means on both sides we are getting 68,100. So once we are through with that, then we have to find the difference between the debit side and the credit side. We know that the credit side was 68,100, and the debit side is 5,500. So the difference is supposed to give us what? The credit sales. So we'll call that as what? Sales into bracket credit. So credit sales for the period. Okay. So what are we getting generally here? I think it's supposed to get like C, 62,600. Yeah. So we're supposed to get 62,600. 62,600. 62,600. Then you are good to go. So that means that will give us what? The sales for the period. So we'll have carry down, you have brought down coming up here as the debtors balancing figure. So balance what? Brought down. We will have 6,600 and we are good to go. Then just have to present it here as what? 6,000. This is a 2,600, sorry. But this is a credit. But where we have a sales on cash or cash sales generally there, then we'll say that our total sales should be equal to the credit sales, okay, plus what? Cash sales. We add the two and we are good to go. But where we don't have cash sales, then our total sale becomes what? The credit sales. You can clearly see that in this question, it is only credit sales that we have. And we are told at the beginning stage that the sales are mostly on credit. That's why you don't see any cash sales coming up. So let's take note of that. So we will have a figure of what? 62,600. 62,600. So after that, move on to less cost of sales, less cost of sales. So we start with what? Opening stock or opening inventory. Go back to the caution. We have been told that opening inventory, here you can see 6,360. So you have it here, 6,360. Okay. Then we add what? Purchases. Add purchases. We want to know how much we purchase for the year in addition with the opening stock. The reason might be that the opening stock wouldn't be able to satisfy customers for the year 2023, so we need to get additional inventory. So we call that as purchases. So we just want to add that to the opening stock. So here too, do we have that as per the question? I think it's a no. So what do we do to get purchase figure? We need to prepare what we call what? Creditors control account. So let's say this is working 1. So workings 2. Creditors ledger control account or creditors control account. Underline it nicely. And then you have your T account coming up. So you have your cash column indicated there. Okay. So as we able to enter for debtors, the same idea go. So we ask ourselves, was there any opening balance for creditors? And I guess we had one. So we record it here. Creditors, it has a credit balance. So balance brought forward. So we go back. So we were told here that the creditors balance, you can clearly see it from here. This figure, 6,100 as the opening balance. We can see that generally here. Okay, so that's what we are using. So we'll have here as what? 1,600. 1,600. Then the next thing we want to ask ourselves, how much did we pay to creditors for the year? So we are coming to the payment side. And by what means did we use to pay? Is it check or cash? So we come to transaction B. It said the amount paid by check to suppliers during the year was 31,600. So straight up, just want to record as payment. So you have area as what? Payment with check, and that will be at the bank. So record that as 31,600 because we are paying creditors, so they are going to receive. And when they are receiving, we will debit creditors account. We will debit creditors account. Was that all payment that we made for creditors for the year? I guess so. The next question we want to ask ourselves, was there any closing balance for the year? Yes, there was a closing balance of what? 2,600. 2,600. So we present that also. Since creditors has a credit balance, supposed to have their carry down at the debit side. All right, so we'll have it here. Balance carry down. Okay. Balance carry down as what? 2,600. 2,600. So once you are through with that, we'll find the totals. We'll find the totals. And then we go. So what will be the totals here? Supposed to get 0 here. 0, 2. Here we are getting 4. So we are getting 34,200. That means you have both sides to be 34,200 as totals. Okay. Double lines and you are good to go. So once you have that, the difference between the debit side and credit side should give us what we call what? purchases on credit or credit purchases. So you have purchases. So that should be what? Credit. So what do we get? When you find the difference, supposed to get what? In my case, I had 32,600. So we have here 32,600. So as always, for us to get our total purchases, it's supposed to be credit purchases plus cash purchases. You add it to you get your total. But if you don't have cash purchases, then that means your total purchase is equal to what? Credit purchases. So let's take note of that. Don't forget this. So in summary, workings 2. So once we have our carry down here, we'll have our brought down here. So balance brought down, okay, as what? 2,600. So just want to present that also in the income statement, the purchases figure, 32,600. So you have it also coming up here. So you add it, 32,600. Here we don't have any return outwards or anything of that sort. So you just want to keep it. Neither do we have carriage in here. So let's take. So we can add them straight so that we get what we call our cost of goods available for sale. So we can present that here so that we have a name for it. Okay. So we're supposed to get, in summary, supposed to get here, you add them, 6, 9, 8. So we're supposed to get something like what? 38,960. 38,960. Yes, I had that. So you call this as what? You're supposed to present it here rather. So we'll call this as what? Our cost of goods available for sale. Cost of goods available for sale. I will call it COGAS. All right. So once we are through with that, then we less what? We less closing stock. Closing stock. So what was the closing stock in the question? We were told that the closing stock figure here is 6,800. So we subtract that up from here. So we have here as what? 6,800. So in summary, what do we get? That will give us what? Our cost of what? Goods sold or cost of sales. So we are subtracting, and that will give us our cost of sales. So it's supposed to have what? Here we are getting what? 0. We are getting here 6. We are getting here 1. Then we get here 2. So we're going to get 32,160. Was there any wages? Direct wages? No. There's nothing like that. So that means we just have to subtract our cost of sales from the sales figure. The difference is supposed to give us what? Our gross profit for the period. So we'll have gross profit for the period. So what was I getting generally here as my gross profit? So I had 30,440. So we'll have here as what? 30,440. 30,440. So once we get it, then we are good to go. All right, then we'll move on to, there wasn't any other income, so we just maintain it like that. Then move on to what? Operating expenses. So we will say less operating expenses. So we'll less operating expenses. with less operating expenses. So we start first thing first. We remember transaction F, we're told that fixed assets as fixtures is depreciated as what 10% per annum. That means we are on the straight line method on cost. So we start with that aspect there. So we'll have depreciation coming up. Depreciation for the period. So we'll have depreciation to be what? 10%, okay? Multiplying what? Fixtures cost of 3,300, okay? And that should give us a depreciation value of what? 330. If you remember when we were preparing cash book, we met the following expense item. We had rent, general expenses. Drawings is not an expense, so we don't bring that into the income statement. Though it's an expense, but in a different form, it doesn't happen in the income statement. So let's take note. So we have rent and general expenses. We can present that also up there. So we have rent, then we have what? General expenses. General expenses. Well, let's check the general expenses. Was there any additional information for general expenses? That is a no, so that means we can straight up pick out the value straight from here as general expenses, 310, okay? So general expense is supposed to be straight up 310. So we'll have it here, 310. Then for the rent, we need to do workings for it. So we'll say workings 3. Okay, we'll say workings 3 for rent. So we'll have that, let's say here, rent. So we'll have rent account. Okay. So rent account. So as always, you have our currencies coming up. Then we ask ourselves in a question, was there any rent balance as at 31st December 2022? No, there wasn't any rent information, but we had rent information, that is rent owing, as at the year end 2023 to be 350. So we present that up. But before we start, since we don't have any opening balance, we need to take records of those issues of rent that happened during the year. That happened during the year. So we're told that for rent, 3,800 was paid by check, and then by cash, we had 400. So we present that up. Since rent is an expense, any item related to or payment related to an expense item will be debited. So cash, we're told is what? 400. And that of what? Bank, we're told that is what? 3,800. And since we're having rent owing, that means rent becomes a liability. We couldn't pay all our rent, and the balance for any liability should be at the credit side. So you're supposed to be at the credit side. That means you're supposed to have the brought down, so they carry down at the debit side of rent. So we'll have that here. Just be following carefully. Balance what? Carry down. So how was the balance carried down in the information given? We're told that the balance carried down for rent here was given as what? 350. 350. So present. So we present that up here, 350. 350. The next thing we want to do is that once we are through with that, that's all for the rent. We'll find their totals and then we go. So what will be the totals? So when we add or supposed to get Here, let's see what I had per my calculation. I had rent figure to be what? 4,550. So 4,550 as a total. So that means both debit and credit will get a total of what? 4,550. So we'll have 4,550. Right? That was what? Dash nothing there. So that means the difference supposed to be what? The same as 4,550. And we'll call that as what? An item that goes into profit and loss account as a total expense for the year. Total expense for rent for the year. So we'll call that as what? Income statement. So that means that when we go to income statement, we are going to record the amount of 4,550 as an expense for rent. So let's take note of that. So once we have balance carried down, we'll have balance brought down, the same value, 350. So once we are through, we'll come back to this. We'll have the total value to be what? 4,550. And I think that will be all for the expense item as per my workings generally here. Yes, supposed to have that. So in summary, you're supposed to get a total figure as total expense. So we'll have our total expenses or expense item to be equal to 5,190, 5,100. So we just have to do a subtraction from our gross profit so that we'll get what we call the net profit. We'll get the net profit. So what is the net profit figure? With my case, I think I had 25,250. You can confirm that and let's see if that is true. So this is going to be my net profit. Yeah, 25,250. I think I have that as my net profit and gross profit. Here you get this. So once we are through with that, that is all for the C part. Then the last part is we are asked to prepare what? The statement of financial position for the year ending. So we're going to follow the same preamble as we prepare the statement of affairs so that we can be through with that as well too. So let's go through that, and that will be the final part. Make sure to like the video and share with your friends who may be interested in this video, and drop a comment as well so that we know the areas we can cover for you to understand generally there. So how do we go? Here to the last aspect, we are asked to prepare what? Statement of financial position as at 31st December 2023. And same thing as what? Balance sheet, you know. So here too, I have our two columns. Depending on the information that we have here, I can present it like this. So we'll start non-current asset or property, plant, and equipment is the same thing. So here we are looking at for the non-current asset. So we only have just one fixtures. And if we remember, during the year, or as at the year 31st December 2022, there was a depreciation of fixtures that we provided. So we're going to say that we're going to have the next line item to be say less what? Accumulated depreciation. So we're going to have less accumulated. It is accumulated because we want to know the depreciation that we have provided so far from the year 2022 to 2023. Okay, so accumulated depreciation. So what will be the total? What was the depreciation that we provided for the year 2023? It was what? 330. And here, as at when we were preparing the statement of affairs, depreciation figure was also 330. So bring the two up, and then we'll get our accumulated depreciation. So we'll have here as what? 330, another 330, and that's supposed to give us a figure of what? 660. So you're supposed to subtract that figure from what? Fixtures value, we're supposed to go 3,300. So once we are lessing that, the difference will give us the net book value. And what are we getting? Supposed to get that value as what I had. Well, let's see what I had. Here I had a figure of what? 2,640. So I had here to be 2,640. So I think that was all for the non-current asset. So we come back to what? The current asset. Current asset. Okay. Current asset. So as always, we start with first line item stock. We can talk about debtors. We can talk about cash. We can talk about bank. If we have any prepayment, we bring it up. So what was our stock value as at the year ended? We were told that this was 6,800, so we bring that up 6,800. So you'll have that here. Then debtors here, per hour workings. The balance should be 6,600. Present that also here. Then cash balance, we go to cash book. What was the cash balance? Cash balance is 420 that you can see generally here. And then bank balance 17,940. So for cash, we have 420. For bank, we have 17,940. That was all for the current asset. Okay. So once we have this, we find their totals because we are using the equation asset minus liability supposed to be equal to what? Capital. Okay. That's what we are using. So the next thing we want to do is find the total. So let's see what I have for my totals. I had 31,760. So I had here to be 31,760. So once we get this, then we'll less what? Our current liability. So we'll have current liability. So for the current liability, we used to have what? Rent owing and that of what? Creditors. I think that was the two that we were having. So I can bring that up here. Creditors and then rent. So that's accrued. So what was our creditors balance? Here it's 2,600. 2,600. So bring that up here. So half here as well. 2,600. And that of our rent, what was the balance? Credit 350. Bring that also up here. And that's supposed to give us a total figure of what? 2,000. Suppose have 2,000. Supposed to have 2,950. Because we are using asset minus liability called capital, we will less it. Okay. So once we less it, supposed to get, what were we getting here? So I had what? 28,810. So that will give us our working capital. Okay. So I have 28,810 as my working capital. Then I'll add up to the net book value of the fixtures. And that should give me my total what? Net asset. Okay. So when we add that, we're supposed to get 31,450. I think I have that. 31,450. Yes. So that will give me that. But you don't close it until you are through with the other aspect. So the next thing you want to do is go by what? The finance by. So the capital side. So finance by. So we start opening capital. So what was our opening capital in the question? When we calculate, we had the opening capital to be what? Statement of affairs, 19,200. So we present that up here, 19,200. Then we'll add what? Our net profit, or we subtract if it's a loss. So what was our net profit? We had what? 25,250. So we added to, what are we getting? With my case, I think I had 450. So that's going to give us what here? 44,450. So the last thing we want to take into account is to less what we call drawings. So we less drawings. So this is where drawings come to town. Okay, drawings. And we said drawings opposed 52 multiplying what? 250. If you can remember, we're told that of what? Frank made the drawings of what? For the year as 250 for every week. And that's the total supposed 250 by what? 52 weeks. Since we have 52 weeks in a year. So that's going to give us a drawings figure of what? 13,000. So when we less that, then supposed to have a value of what? 31,450 as our balancing figure. And this is going to represent what we call the capital employed, and both sides will agree. So we'll have our capital employed. So here becomes what? Our net asset, total net asset, total net asset. Double lines, and we are good to go. And this is how naturally this question is being what? Answered. And that brings us to the end of our discussion on today's question on incomplete records. So make sure to like the video and share and drop a comment so as we know the areas where we can make helpful tutorials videos like this. So thank you for your time, and I'll see you in the next section. Bye-bye.